Hey, what's up, everybody? Zach is back with another episode of Journey to $1 Million, and the markets took a dive, but overall, not as bad as it was when the markets first opened. So I actually consider myself pretty lucky. Today we picked up a couple hedges that we were talking about for the last couple of days. I mean, we got a XLK, which is technology sector hedge, and also actually we got 200 contracts of those, and we got an shaking my head hedge, which SMH is semiconductor ETF. Because my portfolio was pretty heavy on both the tech and semiconductors. So overall, we're doing pretty good, and we dollar cost average down on some ARC plays. But yeah, the report's up on prostockadvice.com. So let's go ahead and take a look at it. All right. So if you guys want to go ahead and pull this up and follow along with me, and don't forget, the link is in the description. Don't forget to go ahead and follow me on Twitter there. If you can't catch a live stream, which we do every day at opening bell, and if you can't catch the live stream, then you can follow up on Twitter and see the trades we're doing, because I take screenshots of those and post them to my Twitter. So that probably would be helpful for some of you guys. But nevertheless, go ahead and smash the like button. So we were down 11% at one point. If you were on the live stream, you know what I'm talking about. It was pretty bad. So we almost broke even today, which I consider myself very lucky. I was thinking at that time around 10:30, 11:30 today. I was thinking if we could get away with 5% loss, we would be pretty lucky. But sure enough, after the Fed speech, things started rallying up a little bit, and we actually had some gains on the SPY S&P. Actually, it's pretty much flat if you consider the after hours, but yeah, sure enough, it did bounce off our support, which our support was actually kind of overlapping the 50-day moving average. So that is a key support that the S&P 500 just bounced off of. And Dow Jones is pretty much flat as well. But again, I consider that pretty lucky. The Dow Jones didn't even really drop, and that's why we didn't go into the Dow Jones hedges, the DIA hedges that we were talking about a couple of days ago. And because this was not a market crash. Now, if it was a market crash, yes, the Dow Jones would also crash too. So those Dow Jones hedges would be very cheap, and we could get some of those. But this was just a move, basically, to sum it up, it was a move, shift from Nasdaq into Dow. Shift out of tech into more safer and traditional company stock and whatnot. But yeah, this is not a market crash. It was a correction. And the Nasdaq is the last one we can look at. And of course, Nasdaq was down a little bit, but man, I consider that pretty lucky. Sitting right on top of the moving average. Probably this I'm gonna need to adjust a little bit. And, take the technical analysis with a grain of salt. Spend most of your time on the fundamentals, but again, say it again, I consider myself pretty lucky because it was just a correction, and it was a pretty nice little correction there. But anyways, we got the 332 days till expiration XLK and SMH, and if you see, the loss on my options were actually almost the same as the loss on my common stock. So I had a loss of 15,000, but that's a little bit misleading because I had bought those hedges as soon as the markets opened, and I spent about $10,000 on those hedges. So sure enough, the markets rallied, so those hedges dropped a little bit. But I'm not worried overall. This is an insurance policy. I expect to lose the entire $10,000 over the next 332 days, anyways. But hey, if it crashes, then I'll make a little bit of money, and I'll probably dollar cost average into some more of these as well, possibly S&P, but we'll see. But anyways, guys, I'm trying to be as transparent as possible, and I'm not hiding any of the losses and only showing you good days. We're still pumping out the DD and the fundamental analysis as often as we can, and I know some of you guys are right there with me on the losses this week, and it's a little bit hard, but stay strong, keep holding your long terms. My advice would be to switch out of cut some of the shorter term options, because and that's what we did yesterday. You can see all the positions we filled. We took a loss on the Lemonade vertical. We took a loss on the DraftKings vertical. we took a loss on the, well, actually we made money on the space because we sold the put and it had already dropped so much. But we went ahead and closed that out. We definitely took a lot. We rolled the Tesla, rolled a Solo, got some more Atlas Crest. Took a loss on the Palantir, took a loss on the LAC. But basically, the thought process here is my plan of action was going into this knowing that, look, we don't know if the market is going to keep going down, number one, or number two, if we're lucky, be flat for the next week and take a week to recover. But see, that's the thing is, if it's flat or if it's down, we're getting absolutely killed on our short or midterm options positions. So there's no reason to keep those. You might as well roll them out. And I don't necessarily mean rolling by close the position for a loss and reopen it immediately a little bit further out or a little bit higher strike or lower strike or whatnot. But basically my thought process is take the loss of 20% right now, 30% right now, just cut that, shift that capital that you're going to get back for closing these positions, shift it into these hedges, which this is what I was doing. So it's a little bit safer overall, minimizing your risk. In those options positions, if the market is going down or flat even more, they're going to be pretty sour really quickly because of the decay. So there's no reason to be in that. So shift that over into hedges, no matter if it's S&P, no matter if it's tech, whatever you're heavy in, your portfolio is heavy, and shift it into those hedges. And the hedges, just far out of the money puts, about a year out or so, because those are really cheap. And then the rest allocate towards dollar cost averaging your longer term position. So for example, for me, I got into some more ARCs. Well, I was trying to, at least the ARC G, ARC F, and ARC W. They didn't end up filling because the market was swinging around, swung back up a little bit. But overall that's fine. If it goes down, I want a dollar cost average. If it goes up, then it's fine. Let it go up. But we're not trying to force anything. But if it did go down, we're gonna get cheaper deal. We're gonna lower our cost basis. So that was what I was allocating my cash from closing out some of those backwards shorter term options. It's just not a good idea. But that's the name of the game. This is options. This is not common stock where it's like, oh, it's down, let's just buy some more. And that's what I did in the print. Just bought 25 more shares of print while I was trying to, and also the ACIC, and just waited out. But this is not. We're not talking about comments. We're talking about options. It's always a race against the shot clock. So that would be my basic plan. Let me know in the comments if you agree with that or what you did, or if you're on the live stream and you were watching, and let me know what your thoughts on. But anyways, I'd be really interested going forward here. I'm not going to add any to the I'm not going to add any positions to the watch list today, but if you're going to hunt some bargains, this is the time to be doing it. And by that I mean go into your longer positions. For example, the ARC, those are down 10% in this week already. And those aren't going anywhere. Those are still going to be good long-term plays. And 10% is really not much considering they were up more than 100% in 2020. So we're still okay. This dip was not as bad. But if you're a new investor and then you're feeling the pain right now, just know everything's going to be all right. Take a deep breath. Go get some hot chocolate and just chill for the next few days and wait for the markets to go up. Check in once a day. Put some limit orders. Try to dollar cost average your long positions. But that's basically what I have to say about that. And if and that's what those ARC ETFs are doing, and not just those, but the other funds and the hedge funds, and they're all going dollar cost averaging down. For example, on Palantir or Tesla, even Bitcoin is down, and we see Square has just bought 3,000 something Bitcoin, something like that, if off the top of my head. So now is the time to be doing it, guys. Bitcoin would be a good play right now. It is down. I've got some limit orders for ETH right now, hoping, because ETH is trading around 1,600. Down from $2,000. So this is a good time to be putting money into it. And remember, guys, I keep 15% on the sidelines in cash, ready to buy the dips. Don't spend all 15% in 1 or 2 days. Spend maybe 3 to 5%, or 2 to 3% really every single day, and average it in. And then once everything is going up and it's at all-time highs, go ahead and take a little bit of profits. Don't take too much, but take a little bit, and keep the cash on the sidelines. But anyways, if you guys want to take a look, these are my current positions open. And remember, I moved away from the Excel because they don't really accurately represent the different options like the condors and the butterflies and stuff like that. So I just go ahead and take some screenshots. But yeah, I mean, some things are not all that bad. Still, I definitely consider myself lucky only to be down 5% on the ARK. It's literally down 10%, and Tesla is taking a pretty big hit. But we're selling covered calls on Tesla, even though it is up. Technically, it is up. It made a nice little rebound. But anyways, guys, if you want to take a look at that, please do go ahead and pause the video or go to prostockadvice.com/blog. This is the first one on the list, and take a look at those. And don't forget, guys, follow me on Twitter, posting all the live trades. Go ahead and find the link in the description for the Discord server, which there's a VIP section. So if you really need to get in contact with me, I'm having a little bit of trouble answering everybody on, no matter if they're coming from Reddit or if they're coming over from Twitter or YouTube. It's a little bit time consuming having to answer every single person. So if you go ahead and put your important questions in the VIP section of the Discord, and then every single day I will answer those priority. So guys, and if you're wondering what platform we trade on, it is Webull. So if you like that, I really recommend it for the research, for the technical analysis. It's really, really nice, and they always had really good customer support for me. They answer my emails very fast, unlike Robinhood. So if you want to go ahead and move over to something a little bit more advanced than Robinhood, or something better than Thinkorswim, for example, for the technical analysis and whatnot. But guys, find the link in the description. They're giving away some free stock right now, and it really helps me support the channel. Since we're doing all this for free, I'm doing it for you guys. I enjoy it. I'm having fun with it. I'm being as transparent as possible. But anyways, guys, see you on the other side. Peace.